So guys, the new month is officially upon us, which means that it's time for another dividend portfolio update. And I don't know what's going on right now, guys, but we are sitting at yet another all-time high in the portfolio. At any rate, in this video, I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in October. But before we get to that, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any cool milestones in your portfolio? Anything that happened to you guys this last month, I want to hear about it in the comments below. Anyway guys, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download the spreadsheet in the description of the video. And what we're looking at here is my main taxable brokerage account over on Charles Schwab, which we can see is currently valued at $68,351.95. And looking at the dividend income breakdown, every single year this account is bringing in over $2,600 of dividend income, which breaks down to about $217 every single month on average. And we just passed the $50 per week mark. That's a cool little milestone there. But anyway, this means that every single day I'm bringing in $7.13 from dividends without having to lift a finger. But going back to this account's current value for just a moment, this means that we've added about $1,300 or so just in the last month, which is really nice. And this also marks the third month in a row that we've seen all-time highs in this account. And if we look at the breakdown for the month over here on Snowball Analytics, which is another portfolio tracker that I use quite a bit, guys, and if you're looking for something with more bells and whistles than your standard spreadsheet, or if you're just generally not a spreadsheet person, then I think this is the portfolio tracker to use. This one's a beast. And the best part about it is you can try out Snowball Analytics for free. In the description, there's a link to a 14-day trial so you can check it out and see how you like it. I don't think you'll be disappointed. Like I said, this gives you so much insight into your portfolio. I think you guys will really like it. But anyway, getting back to it, it looks like for the month of September, my portfolio climbed about 3.5%, which is, about $2,300, most of which came from share price appreciation. It looks like nearly $2,200 of share price gains in September and another 168 or so coming from dividends. And the amount that we see here does not include the dividend payment I received from SCHD in my Roth IRA at the end of September, so we can add an extra $70 or so on top of that for the total. And on the topic of dividends, these are all of the payments I received this last month in my taxable account, with the largest one being from Johnson & Johnson for $45.20. That was a really nice payment. I also received a pretty solid one from Chevron for $31.41, and then another really good one from Realty Income for $26.34. And in total, including the SCHD payment from my Roth IRA, I received almost $240 for the month, making September one of my better months of income for sure. But anyway, now comparing my portfolio's performance in the last month to the S&P 500, to the NASDAQ, and also to SCHD, it's pretty close here with the S&P. I'm only trailing it by about 0.25%, so that's not too bad. Looks like the NASDAQ outperformed my portfolio by about 1.7%, and it looks like I beat out SCHD by nearly 0.9%. And then zooming out to the 3-month period here, since September marks the end of Q3, it looks like in the third quarter of 2024, I outperformed everything by quite a bit. I beat the S&P by about 9.6%, the NASDAQ by nearly 15%, and SCHD by about 3%. But then if we zoom out once more to the YTD, it looks like things are a bit closer. The S&P is beating me by about 1.5% here in 2024. I'm outperforming the NASDAQ by almost 0.6%, and I'm beating SCHD by 4.4%. So overall, it was another really solid month of performance. And with that, there were two stocks in particular that really stood out, which is what we're going to take a look at next. Now, starting with my best performing stock for the month, this one is going to be Williams-Sonoma, who saw a really nice gain in the last 30 days. They were up 16.66%, which is a nice addition to their year-to-date performance, where they're up 58.33%. And if we zoom out once more over the last year, Williams-Sonoma is up over 100%. And taking a quick look at my position, I have 36 shares of Williams-Sonoma, and my average cost is extremely low. I'm very proud of this position, $66.50, which is going to leave me with a total return just above 126%. But getting back to the stock's performance real quick, at least in this last month, I don't think there was anything company specific to really warrant this substantial climb. I mean, there were a lot of stocks that saw some pretty substantial run-ups in the last month. I think a lot of it was just a reaction to the interest rate news. And this next stock, which is Lowe's, also surged for the same reason, I believe. In the last month, Lowe's saw about a 10.4% climb, so another double-digit gain in the last month. And if we zoom out looking at the year-to-date performance, this is going to leave Lowe's up in nearly 30%, so it's been a very strong performance performer this year. And in the last 365 days, it's up nearly 40%. So some more really strong performance. And once again, just taking a quick look at my position, I have about 16.4 shares of Lowe's at an average cost of $194.50. So on a total return basis, my Lowe's position is up just over 43%. Not too shabby. So both of those, Williams-Sonoma and Lowe's did really well for me this last month. And now on the other hand, in terms of poor performing stocks, the only one that saw any notable decline was Altria Group, who was down 8.6% in the last 30 days. So a pretty substantial decline for these guys, and this officially puts them under $50 per share again. But if we zoom out looking at the year-to-date performance, Altria is still looking good. This company's still up over 26% here in 2024. And looking at my Altria position, I have about 56.2 shares at an average cost of $42.63. So even despite this drop in the last month, my position's still up quite a bit. Still looking really good. On a total return basis, I'm up 34%. All right, guys, now getting into all of my buys for the month, it was a very straightforward month of buying. Not a whole lot of action, but I did end up starting a new position in the portfolio. I haven't told you guys about it yet. It's been a mystery stock, but yeah, I've been dollar cost averaging into this new position over these last couple of weeks. And in my next video, which will be coming out in just a few days, I'm going to reveal this mystery stock to you guys. I'm going to tell you all about it, and I am so excited to share with you what it is. But yeah, that's the only individual company that I added to in September. I picked up 20 shares at an average cost of $32.40, which, could give you a little hint there. And if you guys have any guesses as to what this mystery stock is, let me know in the comments. I'd be curious to see if anyone gets it right. But then in addition to the mystery stock, I also dollar cost average into SCHD like I always do. In September, I picked up almost 5 shares of the holy grail of ETFs at an average cost of exactly $84. And then along with that, also added a little bit to VU, almost half a share of VU at an average cost of $514.54. Like I said, guys, very easy, very straightforward month of buying. And with that, now moving on to taking a closer look at my Roth IRA over on M1 Finance, we're looking at my Margarita Money portfolio. We can see that this is currently valued at $13,214. It had a pretty decent month. It looks like the Roth was up about 2.2% in the last 30 days. And if we look at the 3-month period, just over the last quarter, saw some really strong performance. It was up 7.4%. And if we zoom out looking at the year-to-date performance, the Roth is up 17% so far here in 2024. So all across the board, things are looking good. And if we take my main taxable account, which is valued at $68,351 and is bringing in just over $2,600 of annual dividend income, and add that to this Margarita Money portfolio at $13,214, and this account's bringing in $340 of dividend income, that's going to bring my combined portfolio value to $81,565. We're officially across the 80K mark, guys, which is awesome, and we're moving quick to that 90K. But anyway, $81,565, and the annual dividend income is $2,946. So we are getting very close to 3K. And with that, the current projected annual income of $2,946 represents a $42 month-over-month gain. This time last month, the projected annual income was $2,904. So we're making some great strides. And like I said, we are inching closer and closer to that 3K mark. And I am 100% sure that by the end of 2024, we're going to hit over $3,000 in projected annual income. That's been one of my goals. I know we're going to hit it. It's without a doubt in my mind. We are so close. But anyway, now looking at the year-to-date income gain, I started out 2024 with $2,473 of projected annual income. And so far this year, we've added $473 to that. So guys, it's all looking really good. Very happy with this progress. Now guys, as far as my watch list goes, I actually did make some changes in this last month to how I'm structuring my watch list. So prior to this change, I had the companies that I might want to buy, and then I had the companies that I want to buy. And it's really not all too different now. I still have 2 different watch lists, but instead of the companies that I might want to buy, this is the somewhat interested list, and these are the companies that I think are kind of cool. I'm not entirely serious about them yet, but I like them enough to at least keep an eye on them. And then I have the very interested list, which would replace the companies that I want to buy list. And these are the companies that I'm a bit more serious about. I've probably spent some more time with these. I've thought about them a bit more and therefore see them as more likely additions to the portfolio. And going back to this somewhat interested list here, out of both of my watch lists, the only company that I added to this list in the last month was this one right here, VRSK, which is Verisk Analytics. Analytics, which in a nutshell is a data provider to insurance companies, which they use in their underwriting and risk assessment. So it's pretty deeply integrated into its customers' operations. I mean, this data is essential to those insurance companies. Now, because these insurance companies are making multi-billion-dollar decisions based on the data that they receive from Verisk, there's a huge trust factor involved here, which creates a high switching cost for their customers. Not to mention, this company operates on a subscription-based model, which means they've got that recurring revenue coming in, and that definitely puts them up a couple notches in my book. And in general, since I don't really know how to analyze insurance companies quite yet, I figured this could be a good alternate way to get exposure to the insurance industry. And although I still have a lot to learn about the company, I think it looks pretty interesting. And with that, if you want to learn about some more stocks that also look very interesting, then check out this next video right over here. In this one, I'm telling you about 4 dividend growth monsters who are not only growing their dividends at aggressive rates, but that dividend growth is actually getting faster over time, which is very cool. So click right over here to check those out, and I'll see you in the next one.